Hello guys, so you're welcome once again to my channel. So this evening is just going to be a quick review of what we should expect this week on volatility 75. So as I made mention last week, that we're looking at price doing what it did, and basically it was able to do what is done, and then now we are currently looking. So I give you scenarios, possible scenarios that price was going to do. I told you about the liquidity that price had to grab. Price grabbed the liquidity up here, I think the previous week, and I told you that now we are seeking to grab all the liquidity resting below before price would make that move up. And beautifully, price actually did grab the liquidity resting below. So now let's look at price on a weekly time frame. So last week we were looking at these liquidity pools on the 1 hour time frame, on the daily time frame. We're looking at these liquidity pools. So this sell side liquidity. So for those of you who have not watched my previous video, you can go and watch the previous video and understand what it means by sell side liquidity. So I told you that there was a sell side liquidity here that needed to be grabbed, okay, and then a price beautifully grabbed the sell side liquidity resting in here, and then also the low here, the sell side liquidity resting below it was also grabbed, okay. So for those of you who have not watched my video, I think you should do that. You should take time and watch smart money concept, liquidity pool or liquidity grab, sell side liquidity and buy side liquidity. My line is not straight, so you would understand the concept very well, and I believe that you'll be able to apply the concept in your trading. Alright, so we're looking at the liquidity resting below this side too. Price grabbed the liquidity, and then what else? There was a fair value gap resting in here, and then beautifully you could see that price took down the fair value gap, traded into and took down the fair value gap, and then it's rallying back up. Alright, all these ones were short-term lows. All these areas are short-term lows that price had to beautifully do that into this other block, and then price is rallying back up. Alright, so you could also see from here, those of you who have watched the previous videos, that when price got here, what did it do? Price traded back into this breaker, okay. Yes, price traded into this breaker, and then so anytime price trades into a breaker, all right, beautifully you should see that, or you should know that there will definitely be another block which will be formed after price has traded into a breaker. And one important thing you can take note is that when price trades into a breaker, so for instance from this point to this particular point, notice I'm using the fib to show you the mean of this particular entry. Look at this area, okay. So let me quickly take off the fib, so that what I just used is called Fibonacci, okay. So look at the mean of this particular order block, okay. This continuous bearish candles here, this continuous 3 bearish candles here. All right, so initially when price traded away from it, look at what happened when price traded back into that particular area. You could see all those form of rejection. Price couldn't close in on the fair value gap. I mean, this was a clear sign that price has traded even below the main threshold, couldn't close in on the fair value gap resting before the last order block. Definitely price had to come in and close in on the fair value gap into that other block, into the main threshold of that other block, and then price has to rally back up. All right, so let's go back to our weekly time frame as we are still setting the premise. So why has price done what it just did? So we have set this we have set the standard already, of set the stone rolling already, that we have price trading from this low to this point and then down this area, and then we had a break in structure. All right, we had a break in the market structure just in this, around this area. Okay, just around this area we knew that the market structure had been broken or has been breached this point. So in as much as we have price, if price trades from a certain high to this point and then it continues to another point and then it does this, so the normal retailer will say that price is trending downwards, and then it breaks this high. Okay, it breaks the recent high. What we call is that price has broken structure. Okay, so what we do is that we wait for a retracement, or we wait for a reversal into an area where there is liquidity resting. Okay, then we continue our rally back up into the sky. Don't think that price is going to move directly and with a speed of light as I've drawn this line. So we hope that price is going to move faster, as it's going to move with its normal movement, grabbing liquidity, sweeping the lows and highs, sweeping the short-term lows and highs, grabbing the fair value gaps, and then balancing off price before it reaches to whichever level it wants to reach up to. Okay, all right, so beautifully we've seen that there's been a breach, or we've seen that there's a break in structure. Price had retraced, left some short-term lows, left some liquidity pool, that's the sell side liquidity. And then what happened next? The next thing that happened was that price had to sweep down all this liquidity, and then we have a rally back up. Price didn't just sweep the liquidity, but as it swept the liquidity, it traded back into the other block that caused the break of the structure. Okay, price traded back into that other block that caused the break. So the other block will be our next area that we have to look at in the next video, when we are looking at the smart money concept, when we are looking at the terminologies. So one of the terminologies that you have to understand is order blocks. So that's what we'll be looking at in our next video, so watch out for that video to learn more and know how to go about trading on the market and making money. All right, so beautifully price has traded back into this order block, this particular order block, and then we could see that price is rallying back up. Now this is our weekly time frame. So on the weekly, as price has traded back into this order block, we don't expect anything much. Should price retrace back, now listen carefully, should price come back, we are looking at price coming into the mean threshold of this particular order block. Should price drop, we are looking at price dropping into the mean threshold of this order block. Now let me be more specific. So we are looking at the mean threshold of this order block. Why would price even drop all the way down into this area? We have some low here which has some sell stops below it that price can necessarily sweep those lows. Beyond that, the volume of the order block, this particular order block, this volume that you see here is what actually holds this order block. Okay, so these orders were placed by the institutions. Where we have institutional orders, then we see a rally up to take down or to sweep highs. Okay, so this particular bullish candle you see here is the one that has volume. Okay, this is the volume. So price can trade deep into the volume of this trade before it rallies back up. I hope I'm making a little bit of sense here. So what are you saying? So today we could see, today Sunday, Saturday, price is rallying back up. Let's go to the daily time frame so that yeah more. So Saturday it traded, closed bearish, and then we could see that on a Sunday we are having a very strong bullish movement. What is happening? All right, so price is closing in on the fair value. Price has closed in on this fair value gap in here from this point to this point, this fair value gap. So let me quickly indicate it for you to see. So please, if you are new to this channel, I would like you to subscribe. If you are new to this channel, I would like you to subscribe and then share for others to equally come on board. All right, there's another fair value gap in here. That price necessarily has closed in on the first one, so we are looking at price rallying to close in on the second one. Now let's go down to, so ignore the lines you are seeing here. Let's go down to this particular price action here and look at this price action here too. So is there any other order block resting in here? So with this particular price action here on the weekly, we can consider it as an order block. And what price necessarily can do is that price can equally trade into the mean threshold of this order block, and then it could reverse trade back into where we are looking at price doing the real action before the movement up. So now, where is the mean threshold of this particular bullish candle here? Notice I'm using the bodies of the candle, which lies in between this. So let's go down to our daily time frame. Beautifully, you could see that where we have the mean, the 50%, which is the body of the candle to the body, is within this fair value gap resting in here. So what do you think? Price would necessarily trade into it and closing on this fair value gap before we see if there's going to be any form of retracement. We see any form of retracement down. Now go down to 4 hour time frame. So this is where we're looking at. Now look at this. Price started from all the way we had price traded back or up all the way this area, this high, this low, and then price dropped below this low, traded back into this area. Which area did it trade? Price traded back into this mitigation. This is not a breaker, is a mitigation. Price traded into this mitigation, and what happened? We had this dropping. So these particular candles here are regarded as order blocks. These two candles here are order blocks. Price traded back into them, and then boom, it broke down before we had this. So should price close in on this area? Price has actually closed in on this fair value gap price even in the 4 hour time frame. If it breaks slightly beyond that, it's coming into this particular area beautifully. We will still see a retracement down to the downside. Now whatever has happened here has happened, and then we are seeing price trading to this high and then this low and then up, breaking the high here, and then trading back into the breaker. We are seeing price rallying back up into the sky. So this is our expectation. We have to close in on all the gaps, and then we see if price would retrace back into our, why we are expecting another form of retracement is that there is a fair value gap resting in here. Just below this low, there's a fair value gap resting in here. Can you see that there's a fair value gap resting in here that price necessarily can equally take down the fair value gap and then rally with it? So like I said, price can close in on this. If it closes in on, so for instance, let's go to our daily time frame. Look at the fair value gap that price can necessarily close in on. Let me indicate where it begins and where it ends with this. So this is where the fair value gap is. Okay, price can necessarily trade and close in on this area. Look at where this line is. It's indicating the mean threshold of this particular fair value gap. Now let's go back to our weekly time frame. So look at it. Should price trade up below this area, price will not be able to hold volume because the volume of the trade is